Hello everyone and welcome back to the channel. Today's video I am going to be looking at B&M bargains, which is currently down around 37% over the past year from the time of the recording. And the goal of this video is very simple: to understand why the stock has fallen, what the business actually looks like today, and whether this recent pullback could make it worth watching from a long-term perspective, or at least added to the portfolio. Because at the minute, I'm trying to have a look for undervalued companies, but good fundamental companies as well that I could add to my portfolio. So, what is B&M? Well, B&M European Value Retail SA is a Luxembourg-based holding company for the B&M Group. The company operates discount retail stores, primarily located in retail parks, town centres, and local shopping precincts like shopping centres and all that. If you don't know what the word is, its main brands include B&M, Heron Foods, and Babu, offering a focused range of products across food, grocery, and general merchandise categories. Products are largely sourced directly from manufacturers, supporting the low-cost retail model. So, for a person who's looking at B&M in the UK operates over 650 stores, while Heron Foods run about 290 stores, which strengthens the group presence in the value-focused retail. And in France, Babu operates approximately 100 stores selling the general merch, clothing, and footwear. So, at the time of recording this, the price for B&M is 187. It's in the UK country, Disco Retail, market cap of 1.8 billion, IPO at 2014 with 39,000 employees, with dividend growth streak of 2 years, 5-year dividend growth of 4.3%, and a dividend yield of 7.3%. Now, before we go any further and you're looking to invest, then there is a free gift stock waiting for you on Robinhood. Robinhood is currently offering free shares when you sign up and fund an account. There is no obligation beyond that, and it can be a simple way to get familiar with investing. As always, capital is at risk, and please do your own research because I'm not a financial advisor, as investments can go up and down. But links for this Robinhood will go down in the description down below. You might as well go and pick up some free stock if you're going to start investing today. And as well, Trading 212 also doing the exact same thing, where you get free shares worth up to £100 for each time you guys open up your account using my link down below. Or they also have an investment account, CFD account, stock ISA shares, and a cash ISA with up to 3.8% on your awarded cash that you're not investing on. So you might as well go and check those out in the links down below. But like I say, I'm not a financial expert, so please do your own research. So why has B&M fallen 37%? Well, the major factor was an accounting error related to overseas freight cost, which raised concerns around internal controls and governance that eventually led to the departure of the CFO, which naturally shook investor confidence. On top of that, the company reduced full-year profit guidance, which added further pressure to the share price. And finally, this didn't happen in isolation. The wider UK discount retail sector has also been under pressure due to cost inflation, competition, and cautious consumer spending. So as we can see, the performance deep dive, when we look at performance in more detail, the momentum has clearly taken a hit over the past year, which is reflected in the share price. That said, though, valuation metrics starting to look very more interesting. Ratios like price to sales, EV to EBITDA, and free cash flow multiples suggest that the stock is now trading at levels well below where it previously was. This doesn't mean, though, the stock can't fall any further, but it does suggest that a lot of bad news may already be priced in. And as well, the dividend yield is at 5.97%, which is very nice indeed if you're going for dividends into your portfolio. So, what is good for us? Why should we add this to the stock? Is it going to be expanded? Well, let's have a look. So, management has previously outlined a target for around 1,200 B&M stores alongside continued growth of Heron Foods in the convenience segment. There's also ongoing expansion as we speak using both Babu and B&M retail formats in France. The strategy remains focused on growing a value-led retail footprint in high-traffic retail parks and local centres where demand for discounts and essential goods remains relatively resilient. I do apologise for my English. So, What does the intrinsic value look like? Well, based on different intrinsic value scenarios, worst case, base case, and best case, the stock appears to be trading way below estimate intrinsic values, and in most scenarios anyway. Even under more conservative assumptions, the current price suggests a meaningful discount compared to long-term fundamentals. Of course, though, intrinsic values models depend heavily on assumptions, but they're very much useful for understanding whether the market may be overly pessimistic. So as you can see, the worst case scenario is 54% undervalued, where the best case is 78% undervalued. Wall Street estimates, however, though, do have a little bit of a different look. Their lowest forecast is at 166 GBX, so at the time of recording it's a 9% downside. An average, though, is at 29% upside, and of course the best is at 157. So if we go back to the intrinsic value, it's pretty much in between the base and the best case scenario. So that's pretty much looking very nice indeed. So this kind of operates a potential upside with the business stabilizes and executes on its plan. Then, of course, like I say, its upside could be very well in coming up to our future price. However, this wide range highlights both risk and opportunity, so please make sure you do your own research because investors are clearly divided on the outlook, which often the case after a major sell-off. So what are the final thoughts? Well, B&M worth adding right now? Well, this isn't financial advice, but after a 37% decline, the stock is clearly in a very different valuation position than it was a year ago. The business still generates cash, operates in defensive retail segment, and has a long-term expansive plans in place. At the same time, risk remains, particularly around execution, margins, and competition. For me, though, this puts B&M firmly in a watchlist category and potentially an immediate buy. But I don't think it's worth selling for. But like I say, please do your own research. I hope you guys enjoy, and I'll see you on the next one. Goodbye.